Listen, have you ever tried to get a loan and not be able to get one? Have you ever needed money and just couldn't figure out where to get it from? Well, today we're going to explore 5 ways that you can borrow money without a credit check because you will be borrowing the money from yourself. Get a loan, no credit check. You are a walking bank. You are worth more than you think. You are rich, bitch. Yes, you really are. There are ways that you can get money without a credit check. You can get it from yourself. You may say your pocket is empty, your purse is empty, your bank account is empty. So how are you going to borrow money from yourself? Well, there are several ways that you can do that. One, you can borrow money from your life insurance policies. Yes, there are life insurance policies that allow you to borrow money. Take a cash out value. But it is best that you pay it back. In the event of your demise, your beneficiaries will be very happy to know that you have a life insurance policy. But they will be very upset to find out that the life insurance policy is worthless because you borrowed the money and did not return it. So, therefore, if you borrow money from your life insurance policy, please plan to pay it back. But borrowing money from your life insurance policy is one way that you can get money when you need it without having to worry about a credit check. Another way to borrow money without having to worry about a credit check is that you can borrow your money from your 401k. There are different rules that apply to different types of investment accounts that you have with your employer. So you may want to check to see. You can borrow money from your 401k, but you may have to pay taxes on it or a penalty. That money can also be paid back. You can also cash out any investment accounts, or you may be able to sell some stock. So if your company offers stock options and you have participated in this stock option program, you may be able to take a cash value if you sell your stock. Another way that you can borrow money from yourself is from your home. If you currently have a mortgage or a home, you can borrow money against the value of your home as long as the balance of your loan is less than the money that you are planning to borrow. You can use your money equity line of credit and you can get cash out for your home's value. Traditionally, you can borrow up to about 90% of your home's value minus the current balance due. Say for instance that your house is worth $500,000. 90% of $500,000 is $450,000 and you owe $375,000. The difference between $450,000 and $375,000 is the amount that you can borrow. Just ensure that you understand the terms of your loan and your interest rate and the amount that you have to pay back. Also, you can borrow money from yourself by using your own personal stash. If you have money that you put aside for a rainy day or money that you have in an emergency fund, that money can be used if you need to use it, but just ensure that you put the money back as soon as possible. You can also take out a student loan without having to do a credit check. Student loan money has to be repaid. However, it traditionally does not require a credit check. They do, however, check to see if you have ever defaulted on a student loan in the past. But they do not check your FICO score to see if you are credit worthy. So taking out a student loan may be a way that you can get your hands on some fast cash. In order to qualify for a student loan, you usually have to be enrolled in an accredited school and taking at least 4 to 6 credit hours. So you will get a bang for your buck because you will get cash in your hand as well as you will learn a new skill or obtain some education that would in the long run bring you money as well. You can also get cash advances from future payments. Say for instance you are a contractor and you invoice your products or sales or services. You can ask for payments in advance. Just understand that once the invoices come in, you will not receive payment because you've already received your payment. You may have an employer that will pay you in advance and that you can take your paycheck early. You may also be able to have your bills and to your creditors deferred. You can do what is called a payment deferment. A payment deferment is when you forego a monthly payment or two. Sometimes those payments are placed at the maturity of the loan. Say for instance you have a car note that will be paid off in about 18 months. But if you defer 2 of your payments until the maturity of the loan, then your car payment will not end for 20 months instead of 18 months. Sometimes creditors offer to forgive payments or two. So instead of the 2 payments being placed on the end of the loan, you can have 2 payments forgiven altogether and not owe them. I know you may say that that's not a loan because it's not actually putting money in your hands. However, it may not be putting money in your hands, but it's helping you not to have money going out of your hands. So not owing somebody something is just as good or better than having the money. Having the money and then owing it is not the same. You can also ask to have your payment due date. You can also ask for a due date change. You can ask your creditors to have your due date change. Many times in a loan or a mortgage or some type of obligation to a creditor, they will offer you to change your due date to a more convenient date. Other times you can just request one on your own. Say for instance that February 28th you decide to pay all of your bills that are due on March 1st. But after paying those bills on March 1st, you anticipate having problems paying your April 1st bills. So you decide to contact your creditors on March 2nd to discuss April 1st bills. During the discussion, they approved for you to change your April 1st payment dates and your payment dates going forward to the 28th of the month instead of the 1st of the month. So instead of owing April's bills on April 1st, you now do not owe them until April 28th. The time between February 28th when you paid your last bills and April 28th when your bills are due again is a total of 59 days. So therefore you have about 2 months worth of non-payment to decide or to determine how you're going to resolve your financial issues. Once again, that's not a loan, but that's money back in your pocket. Then on April 28th, you can pay your regular payments, which will mean that you will not have a payment from February 28th to April 28th, which is 60 days between payments. So that will give you 60 days between owing money from February 28th to 28th. Once again, it's not putting money in your pocket, but you don't have to worry about having money taken out of your pocket, which is just as good or better. Also, you can lend money to yourself if you have a business. If you have a business and there is money or assets in your business account, you can take it out and use it for your person, but you must pay it back. And you can also do the reverse of that. If your business needs money and you have personal money, you can lend your personal money to your business, but have your business pay you back your personal money with interest. Just remember that when you borrow money from a bank, a lender, or a financial institution, the interest that you pay back goes into that institution's pocket. It goes into their pocket. So why not pay your few of the ways that you can lend money to yourself and you can get that loan that you need and you don't have to worry about doing a credit check. I would like to make this disclaimer. I am not an attorney, nor am I a certified financial advisor.